Okay, now a question that people have for me would be, Adam, there are so many currency pairs, right? How do you scan the markets? How do you have like an alert system and all those things? And the answer is yes. My alert system are my fellow traders, our community. So as you know, we now have a community of about 400 traders in our chat groups where we're chatting literally 24 hours because we've got people from the US, from the UK, from Maldives, Kuwait, Singapore, Saudi Arabia, and it's round the clock. So there are 400 of us, and whenever we are free, we watch the markets. Whenever we see a setup, we alert each other. Okay, and that's our alert, which is each other, right? So the moment someone posts an alert, how do we look for trades every day? Basically, we've got a trading community of about 400 traders and all around the world. So whenever we are free, we look at the markets and we alert each other, every single day. In fact, if I open up my Telegram chat group, let me just show you where is it right now. Yeah, you can see, they are all trading right now. In fact, they are actually watching this webinar as well. So they're kind of like giving me comments over here. So I'm going to show you some of the trade calls they made in the last few days. And we'll analyze the trades together. And then I'll do a live, I'll go into the markets live right now and see, are there any trades to take right now, right? If they are, we can take them. If they aren't, then there's nothing to trade. So let's take a look. Okay, so see, these are some of the recent trade calls that I screen captured. So let's look at the first one, which is 16th of November. This was the one here. Okay, yeah. So this was a trade call by one of my students, Chia Yi. He said, Frank Yen, bull flag, 50-minute candles. This was on November 16 on Frank Yen. So let's take a look. Frank Yen, November 16. Okay, there we are. Yeah, here we go. Okay. All right. So the trade call was made here during this time. Now, take a look at this pattern here. Can you tell me what pattern it is? Is it a choppy pattern? Is it a trending bouncing off 50? Trending bouncing off 18? Or is it a surfing pattern, right? You should know right now. Tell me, what is it? It's a surfing pattern. Yeah, it's a surfing pattern, right? So can you see that the price is surfing the 18 moving average? It's surfing, it's hugging it. Can you see that? That's the pattern, right? So the moment he saw a pattern, right? He made a trade call. Hey, it's surfing the 18. It's time to go short based on our bull flag or bear flag surfing strategy, right? So how does the strategy work in surfing, right? So basically, when it's surfing, all right, so it's going down. Okay, so what we're going to see is this: the candles are going down like that. Okay. So what we want to see is we want to see that it makes higher lows going up. Okay. So like this low, this low, this low. So it's making higher lows, higher lows, higher lows. And when it approaches the surfing moving average, we place our sell order below the low of the last candle that served the moving average. We place our stop loss above there, at least 8 pips away, and our profit target anywhere from 13 to 16 pips away. Right, so that's how the surfing strategy works. Okay, so in this case, let's see where was the surf. Yeah, over here, right? So you can see this, it made low, it made a higher low. Okay, and let me just get rid of these angles over here. So the entry was somewhere there. Sorry, it's this one. Yeah. So this was a low. It made a higher low. It made a higher low. So we placed a sell order right below the low of this red candle over there. Okay. And we place our stop loss roughly above the high, somewhere over there, and at least 8 pips away. So 8 pips would be somewhere above the high. That's actually 11 pips. Yeah, so 11 pips. So it must be at least 1 pip above the high and at least 8 pips away. So in this case, this was the entry point. All right, we go short. That's the stop loss, and the profit target is somewhere here, right? So we risk 11 pips to make, again, some of them went for 22, some of them went for 1 to 2. Some of them who are not so aggressive would go 1 is to 1.5. So that'll be about 16 pips away, somewhere over here. So on this candle, it triggered the sell order. It went up slightly, did not hit the stop loss, and then boom, it hit the profit target over there. All right, so that was the trade call for this one. Frank Yen bull flag, right? So that turned out to be a winning trade. That was great. The next one was the 16th of November as well. So you can see a couple of trades a day. And it was made, this is the one, that's right. Engulfing, read this, engulfing form on New Zealand dollar 50-minute candles. All right, so this was 16 November, New Zealand dollar. Let's see if you can identify it right now. Okay. So somewhere here, that was when the trade call was made. Now take a look and tell me what pattern do you see? Is it a choppy pattern? Is it a bouncing off 50? Is it a bouncing off 18? Or is it a surfing pattern? Take a look. All right, so you should be able to see that, hey, it's a bouncing off 50. Okay, so take a look at the price action. See, bouncing off 50, bouncing, 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 bouncing. There we go. So we have that pattern, right? And we are taking a TCE strategy, trend continuation entry. We're looking for a bullish engulfing pattern. Can you see the bullish engulfing pattern? Right, let me make it a bit bigger for you and see if you can identify the bullish engulfing pattern on that day. Okay, can you see the pattern? Take a look. It's right over here. Ta-da! There we go. That's the bullish engulfing pattern, right? Which we learned earlier on, right? So again, 50 has been tested before. Again, we only require one test, but it's been tested 1, 2, 3 times. We are confident it's bounced. Again, I consider this a test as well. So tested 4 times. It's coming down. And again, this high is higher than this high, right? It must make higher highs. And this low is higher than this low, higher than this low. So higher highs and higher lows, you have to see that wave structure. We call this the price structure, higher highs and higher lows. And we have got our bullish engulfing pattern, ta-da, over there, right? So where do we place our buy order? We place our buy order right above the high of the bullish engulfing pattern over there. Our stop loss will be just below the low of the pattern over there. And again, let's see how many pips this is. This was 6 pips. So minimum 8 pips, which means we have to drag our stop loss lower by 2 more pips, somewhere over there. So 8 pips. Yep, somewhere over here. That's right. Okay. So if we're risking 8 pips, you can go for 13 pips profit target, which is what most of us went for. So 13 pips is right there. Okay. So again, that's the entry. That's the stop loss. And that's the profit target. So in this case, again, we're risking 8 pips to make 13 pips. And it was a good thing we weren't aggressive for this one, right? So what happened was, notice the next candle, it triggered the buy order. It hit the profit target exactly. And what happened after that? boom, it went all the way down. Right? So these are instances where if you were aggressive, you went for 1-2, may have gotten stopped out, right? But 1-1.5, took profit, went out. That's why I say the 1-1.5 is a lot less aggressive and win rates are much, much higher. Again, 70-80% win rate for this one, not bad for that one, right? So that was the 16th of November. So I'm showing you a variety of trade calls, of different calls. Let's look at another one. Okay. Let me skip this one. Let's go to this one, just a bit different. Okay. This one, pound franc, valid TCE with 4 consolidation candles. Okay. So what does that mean? Pound franc, 19th of November. Let's go check it out. Pound franc, 19th of November. All right. Keep your questions coming in, guys. Towards the end, I'll answer all your questions, right? As much as I can, I'll answer all your questions. So keep your questions coming in. All right. So here we go. Pound franc. So let's look at the trade call again. What did he say? 19 November, pound franc, TC, trend continuation entry. All right. So the trade call was made somewhere here. So can you tell me what is the pattern right now? Is it choppy? Is it trending, bouncing off 50, trending, bouncing off 18, or is it a surfing strategy? All right, take a look. Tell me within that black box. And the answer is, ladies and gentlemen, it's bouncing off the 18. That's right. Can you see the pattern over there? So bouncing off the 18, toing, 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 right? So we see that pattern over there. So we're applying the TC strategy. So again, how many times must we test it? Again, let me make it bigger for you. Boom. Oops. Yeah, somewhere here. Okay. Okay. So where was our entry? Now, so you can see this pattern, right? Right? Can you see this pattern? So lower highs and lower lows, right? You got to have the lower highs, lows. You can see the price structure over there, right? Now, next, it's bouncing off the 18. Can you see it's bouncing off the 18 over there? Bouncing off the 18. Has the 18 been tested before? Yes, it was tested here. So we've got one test, and that's all we need. So as the price moves up, we call this a consolidation of 4 or more candles, right? So in this case, this, besides the engulfing pattern, another pattern is we enter when the price breaks a consolidation of 4 candles or more. So we call this, after it goes up, it hits the 18, we call it candle 1, candle 2, candle 3, and candle 4. So we have got a 4 candle consolidation, like so. There we go. So we call this a 4 candle consolidation. So once we see that, we put our sell order just below the low of the consolidation, somewhere here. So we are selling at roughly, let me take a look, 2792. Our stop loss would be above the consolidation pattern, 2810 thereabouts. Okay, so what's our stop loss distance in this case? In this case, our stop loss distance is 18 pips. That's right, 18 pips. 18 pips. So is it more than 8 pips? Yes, remember 8 pips minimum. So we're risking 18. Again, if we're not aggressive, we go for 1.5. We're going for 27 pips down. All right, so our profit target will be 27 pips below our entry price. That would be, let me see. Hold on. Somewhere here. That's right. That's the profit target. So what happened was, the price went down, triggered our sell order, and it hit our profit target within 1, 2, 3, 4 candles. So that was a very fast trade over there. All right, so that was another winning trade that was called out in the chat room. Okay, let me show you one last one, and the last one I'll show you is my trade call. My trade calls are the best. Yeah, right. No, I would say that, yeah, everyone's trade calls has an equal chance of winning, all right, because we are all using the same strategies. Okay, so the next one is 19 November, and yours truly, Adam Khoo, said New Zealand dollar setting up for potential H1 bounce. Okay, so this was a bounce on H1 on the 19th of November. So this was my trade call, and this was a really close call. I call this my near-death experience, all right? And I explain why later on. It's literally a near-death experience, okay? So New Zealand dollar, let's look at that. And where was it? Let me see. All right, sorry, this is on H1 candles. This was a H1 trade. So I was trading on the H1 time frame and verifying on the H4 time frame. So you always verify one time frame higher. All right. Okay, so my trade call came. Let me see. Yeah, this is the one. Oh, this was really, really interesting. So let me tell you what happened basically, right? Okay. So what was happening was that so I saw this bounce. So can you see it bounced off the 50? So it's trading strongly, it's bouncing off the 50. It went up all the way, and then it was coming down, and said, okay, it's going to hit the 50. So what did I do? I placed my buy order right here at about 6835 thereabouts. Okay, so that was my buy order. Let me put it in. That was my buy order. I used a buy limit order. Now, and what I did now for H1, my minimum stop loss distance is 20 pips for H1. For M15 is 8 pips, right? So I put my stop loss 20 pips below, which was 6816, I believe. Yes, I was 6816. That was my stop loss. Okay, so this was 20 pips, and I was aiming for a 30 pip profit target somewhere over here. Now, check out what happened, guys. Check out what happened. After I bought here, it went down. I said, okay, game over. I'm done. It's going to stop me out. Now, take a look at what happened. The price missed my stop loss by 0.5 pips. Talk about ass luck. The trading god loved me that day, right? And it turned into a bullish engulfing candle, and boom, it hit my profit target. There you go, right? So this was a close call. I called it a near-death experience. I was 0.5 pips away from being stopped out, all right? And so, like I said, we have a lot of fun every day calling out trades to each other. And again, these are all the most powerful strategies that you can use because they have been proven to have the highest profit expectancy in the markets. But it doesn't mean that we win all the time. We've got wins and losses, but we win a lot more than we lose by following the strategy, okay? So again, that's the trading system. Now, let me show you now really quickly how I look for trades. Okay, let's see if there are any trades right now. Okay, now the first thing which I can suggest that you do is you trade with an MT4 platform. I'm using MT4, and I kind of like organize my charts in a certain way. So over here, you can see the way I organize my charts, where when I click on Aussie pairs, so you see I've got Aussie pairs, Canadian pairs, franc pairs, euro pairs, pound pairs, yen pairs, New Zealand pairs, dollar pairs. So they're altogether 8 of these. We call this profile. So the moment I click on Aussie pair, what happens? I've got all my Aussie charts here. So I've got Aussie CAD, Aussie Canadian, I've got Aussie franc, I've got Aussie yen, I've got Aussie New Zealand, I've got Australian dollar, I've got pound Aussie and euro Aussie. Okay, so for each currency like Aussie, you match Aussie with yen, Aussie with dollar, Aussie with franc, Aussie with Canadian. So each currency will match with 7 other pairs. All right. And if you click on this, for example, this tile, you can actually look at all of them at one time, which can be sometimes a bit difficult because it's a bit small. So I prefer looking at them one by one, actually. Okay. Now, why is that important? Because all the Aussie pairs, they tend to move together at times. All the dollar pairs tend to move together at times. So if I'm trading the Aussie dollar, for example, if I want to go long the Aussie dollar, if I want to buy the Aussie dollar, I ideally want to see that the other Aussie pairs are also showing the same strength. So they're all moving together. So remember, when all the Aussie pairs are moving together, there's a higher chance that my Aussie pair is going to go up because it's like a family moving together. But if I want to trade, for example, the Aussie dollar and I want to buy, but the other Aussie pairs like Aussie franc, Aussie cat are going down, then I'm not likely to want to trade that one because I want to see correlated moving together, right? So by organizing my charts, all the Aussie together, all the Canadian together, I can see at one glance, are they moving together? All right, does this make sense? So let me give you an example. Let's look at the yen pairs right now. And let's see if the yen pairs are showing any pattern that's tradable, okay? So I'm looking at the Aussie, the dollar yen. So take a look right now at the dollar yen. Let me ask you a question. Is this tradable? Is it choppy? Is it on a clear trend? Okay, so is it choppy? Does it look choppy? Not really. It looks like quite a nice trend because the moving averages are in sequence. You can see they're in sequence and they are sloping up. So it is a clear trend, right? Now, is it bouncing off the 50, bouncing off the 18, or is it surfing? It must be one of these patterns. And it looks like it's bouncing off the 18 right now, right? So you see it's bouncing off the 18, bouncing off the 18. Okay, bouncing off the 18. So you may say, hey, would I want to take a trade here? No. Why? Because I don't see higher highs and higher lows. See, I see lower highs and higher lows. So I don't have that higher high, higher low pattern. So this is not tradable. Okay. Now some of you may ask, okay, how about here at this point, right? It bounced here. It bounced here. Would you have maybe bought here on the bounce? Okay. Not really. I tell you why. Because you want to see a deeper retracement. This retracement is too shallow, right? And you can see that this low. Okay, let me show this to you. Look at the structure here, right? So it's like that, like that, like that, like that, like that, like that, like that. Can you see that? So to me, it's making lower lows. Okay, so I don't have that nice higher high, higher low pattern. So I don't like this. Now, I can also look at a H1 and see on the H1, is it aligned? Oh, no. So take a look. You could see that on the 15-minute time frame, it was a clear uptrend, right? We have got the 6, 18, 50, 200 in sequence. But when you look at the hourly time frame, what's happening? It's on a downtrend, right? 200, 6, 18, and 50. So it is not aligned. The time frames are not aligned. And so you won't trade that, okay? Now, and if you take a look, this is, for example, dollar yen. This is dollar franc. This is New Zealand yen. You see they're not really moving together, right? New Zealand yen is on a downtrend and dollar yen is on an uptrend. They're not really moving together. And CAD yen is choppy, right? There's no clear trend. So, there's nothing to trade here, basically, right? So that's what we do. I look for clear patterns on multiple time frames as well as multiple pairs of the same currency. Now, to help, we have actually created some indicators to create a shortcut. So let me show you some indicators. Let's see if Okay, so one of the indicators we have is this one. It's called the TC dashboard, and it was actually created by one of my students from Sweden, if I'm not wrong. Was it Switzerland? One of them, really great guy. He helped me to create this, and ta-da! There we go. So with this indicator, immediately I can see dollar yen, euro dollar, pound dollar, dollar franc, dollar cat. Okay, now what do all these things mean? Okay, so what I want to see is, I want to see all green. So all green means clear uptrend. All red, clear downtrend. All right. So you can see right now it's what? It's green, red, it's all jumbled out. So there's no clear trend, nothing to trade. Go grab a coffee, go watch a movie, nothing to see. So immediately this will scan all the pairs for me. All right. Is that cool? Really cool, right? Okay. So you will get this indicator as part of our course. Yeah. Now, so you can see that for all the dollar pairs, nothing's in sequence. It's all jumbled up. Let's look at how about the pound pairs? Let's look at the pound pairs. Pound pairs, right? Okay, so again, I use my TC dashboard. There we go. And there's an alert. So the moment it's all aligned, it alerts pound franc all down. Okay, so where's pound? Ah, there we are. Okay, so you see pound franc, we've got all red. So we have got a smiley face. Ta-da! That tells us that pound franc is on a clear downtrend. Okay, but I'm unlikely to trade this. Why? Because hey, the rest of his family members are not following him. He's the only guy doing his own thing. I don't like that. I like all the pound pairs, or at least 3 of them, to do the same thing. So I've got strong correlation in the currency pair. But anyway, let's take a look at it to see, is it tradable by itself? So pound franc, let's look at pound franc. Where are we? Pound franc. We're already at pound franc. What the heck am I doing? Okay, so we'll do this. All right. Okay. So currently you can see it's all red. What does it mean? It means it's a downtrend, but you have to also look at the wave structure, the price structure. Okay, so you can see that it's sloping down. Moving averages are sloping down. It looks like it's going down, but do we have a tradable pattern? Okay, in other words, is it bouncing off the 50? Is it bouncing off the 18, or is it surfing? Is there a pattern? Do I have a pattern? And the answer is now you can argue that, hey, it bounced off the 50 here. It bounced off the 50 here, right? And now over here, it bounced off the 50. Could I have sold here to catch the wave down? Right? Could this have been a trade a couple of minutes ago? So let me zoom in and analyze it with you guys. What do you think? Would this have been a sell order here, even as 50 has been tested before? The answer is I don't like it. Now, why don't I like it? Remember, I want to see lower highs and lower lows. I want to see this pattern like that. Okay, I want to sell here to catch the wave down. I want to see lower highs and lower lows. Do I see this pattern here? No, I'm seeing higher highs. It's making higher highs. It's making higher lows. So this is not a tradable pattern, right? So you can see that you know, as a trader, you cannot simply just blindly use moving averages or blindly use candlestick patterns. You must have the experience of reading the wave structures, the high highs and higher lows. So again, when you first get started, it is challenging to be by yourself. And that's why this community is there, where we help each other. When someone calls out a trade, we have got many senior traders and myself that will go in and say, hey, it's not a good trade because of this, or that's a good trade. You know, and from there we learn, we grow exponentially. And that's how by joining the program and the community, you can progress really fast as a trader and have the confidence to trade profitably. Where again, we help each other to find setups daily, right? And again, you can see Very, very grateful people. When I call out trade, they say, thanks, Adam. I took my profit at 1.7R. Thanks. I TP it at 1.6R. And I TP it at 2R. And so on and so forth. All right. This was a very nice message I got from a student of mine, Kok Yu, who happens to be a medical doctor by profession. And he loves trading. He just joined us less than a few days ago. In fact, I think about less than 2 weeks ago. He said, hi, Adam, I'm your Wealth Academy student from Penang. All right. Just want to say thank you for opening up the Forex to Malaysia, Piranha Profits Forex. I just started trading on the 12th of November, just a couple of weeks ago. After I bought your level 2 course, so far only traded M15 and H1 candles. I've managed to have a net profit of 4R in 8 days of trading. All right, that's 4R. So again, if you're risking 1%, that's 4% return in 8 days. Risking 2% is 8% return. Trading with your 400 students in the Telegram chat provides a superb support group to help ensure we only take good setups. And your teaching online is so good and clear and easy to understand. It's as though I'm attending your course live. Ha ha ha. Right. Thank you for that comment. Appreciate that, right? And again, whenever we trade, we post our results here. And again, with a lot of encouragement. These were some other sharings. Today's a good day. 3 winning trades with a total of 5.7R. Same, I got 5.1R, 4R. Right. And again, you've got people from all around the world. One of my students, Michael Bradley from the US, he said, here are my stats for the month, just to show what can be done with discipline and selecting high probability trades. He said, I took 22 trades for a return of 17.9R in 1 month. So that's pretty darn good, right? This is, you can see his trading journal, where he had, 1, 2, 3, 4, 5, 6, 7, 8, 9 wins and 3 losses. Pretty good win rate, right? Losing 1R and winning an average of 1.7 to 2R. All right. This is, oh, sorry, it's not from Sweden. Sorry, this is Einstein from Norway. Yeah, sorry about that, Einstein. Now, he's the guy who actually helped to create a lot of the indicators, like the dashboard that we use right now. So I'd like to thank him. And he said, August is over, my first whole month since I took Adam's course. Look forward to keep trading. And you see that he had 10.5% return on his first month of trading, all the way from Norway, right? Fantastic. This is after Adam's FX class and videos. Just took 3 trades this week, and all of them was hitting my profit targets, right? Although he started small, but pretty good. He made back his fees pretty easily. This guy's from Malaysia as well. Dear Adam, I'm writing to let you know how much I appreciate your trading tips and strategies. My name is Lance. I'm a Singaporean in Malaysia mining industry for many years. Recently, due to changes in politics, I lost everything. Oh no. Because of your guidance, I'm seeing 50% returns from my Forex investment, which I just started 1 month ago, right? So yeah, it can be really, really powerful. And again, a supportive community to build your confidence. He said, Adam's the man. I've tried loads of strategies and his is by far the most reliable if you stick to the rules. One lesson I learned is not to trade on the iPhone. That's right, okay? My result for the month is 7R. So I'm dead shaft, had a lot of worse. On the whole, I feel my trading has grown 100-fold since this group was started. My confidence is through the roof. If you like this video, do click the subscribe button for more videos. If you'd like to find out about online professional Forex and stock trading courses, do visit piranhaprofits.com for international students. And for our students in Asia, we have our live stock trading and investing courses at wealthacademyglobal.com. This is Adam Khoo signing off. May the markets be with you.